Okay, our first order of business. We have Auditor Mike Harmon has the comments and a review of a recent audit of our retirement systems. Auditor Harmon, if you would, please identify yourself for the record, and
Sure.
the floor is yours.
All righty. Well, thank you all for having us here today, and also a big thank you for allowing me to testify first. Unfortunately, I have to leave a little bit around 2-ish. Primarily, I've got some other things that I have to get out to, so thank you for the opportunity to do this. What we're here today to talk about is our special exam that my office has completed in regards to related to the transparency of the Commonwealth's retirement system. Our report was released last month on August the 28th. This examination looked at all 3 of the retirement systems, KRS, TRS, and JFRS. Now, as you all know, in 2017, the Kentucky General Assembly unanimously passed Senate Bill 2 to bring more transparency to public pensions. Of course, we mentioned the former chairman, Joe Bowen, and we appreciate his efforts in that. Since the passage of Senate Bill 2, there has been high level of interest from both this committee as well as from the members of the public about whether the retirement systems were in compliance with the new provisions requirements. The primary focus of the report was evaluating compliance with increased transparency requirements of Senate Bill 2, and of course this report is not a financial statement audit. Now, the exam covered the period between July 1st of 2017 and June 30th of 2018. However, we did ask for the most current dates as of August of this year. Our exam also looked at a few other issues, such as delinquent balances due to the systems and whether the systems had a process in place to ensure they don't make payments to deceased individuals. Now, our focus was on the statutes that require online posting of investment contracts and disclosure of other financial information. The relevant statutes that apply to each systems are listed on the slide. For those who are interested in reading our full report, of course, it's available at auditor.ky.gov. Now, both KRS and TRS have failed to comply with the basic requirements to post all contracts. More than 80% of each system's investment contracts are not posted online. JFRS is compliant with this requirement. It has only one investment contract, and of course that contract is posted online. Now, for TRS, 81% of 136 contracts are not posted. For KRS, we were given inconsistent information on the total number of contracts. Now, of course, the matter is complicated because many managers on August 13th, KRS provided data reflecting 281 total contracts, with 86% being unposted. KRS has publicly questioned the 281 number of contracts, and where we got that number? Well, the answer is quite simple. We got the information from KRS. Now, we were provided a chart in an email stating there were 269 total contracts. Our staff then realized the chart left out contracts that were entered into after Senate Bill 2, and we confirmed with KRS staff there should be 12 additional contracts for a total of 281. Now, even if we use the numbers KRS later provided in their response, 81% of the contracts are still unposted. KRS needs to develop a better tracking system and get this discrepancy resolved, but either way, the conclusion is the same. They haven't posted all the contracts. Now, Senate Bill 2 requires the posting of all contracts. Senate Bill 2 included non-codified language that specifies some of the requirements did not apply retroactively to contracts signed before the bill's effective date, but the requirements about posting contracts were not exempted. The system has indicated their disagreement with the requirements to post contracts signed before Senate Bill 2, but our exam evaluated the systems on whether they have complied with the law as it is written. Now, since the law applies equally to contracts signed before 2017, we included those in our review. Now, our auditors also discovered both KRS and TRS have contracts that refer to side letters that contain additional provisions that are part of the contractual agreement. But none, I'll repeat this again, none of those side letters are posted on KRS or TRS websites as they should be under Senate Bill 2. Now, as to the contracts that are posted, we also had concerns with too much information being redacted and too much control being given to external investment managers. One of our significant findings is that KRS had abdicated its responsibility by delegating the redactions of a confidential and proprietary information that contracts gave that to the external investment managers. Now, if you read the statute, it is pretty clear. It says the systems shall be the ones to separate the information that is open to the public from the information that is exempted from disclosure. Now, this is consistent with how open records laws work in general. Now, the duty is on the public agency to disclose documents unless an exception applies. Now, in theory, KRS has a process to work with investment managers to redact information that should be proprietary and confidential. Now, in practice, what we did find was they allow investment managers to redact whatever they want. Now, KRS doesn't require any justification or documentation to support the requested redactions, and they don't make any redactions themselves. Now, as I've said before, this is certainly like a baseball player going up to the plate and being able to call his own balls and his own strikes. Now, KRS has argued their process is correct based on an Attorney General opinion, but that opinion is from 2016, and as you recall, we passed that bill in 2017. Now, we selected this example to share of information that clearly is not proprietary, but has been redacted from a contract posted on the KRS website. Now, on the left is a page from the original contract, and on the right...
Auditor Harmon, let me interrupt you for a second.
Yes.
Under Senate Bill 2, it says that you're given access to a full unredacted version of any of these contracts.
That is correct.
Were you given full access to all contracts for KRS and TRS?
For the ones that we requested in our sample, we were.
Please.
Thank you, Mr. Chairman. On the left of this page from the original contract, and on the right is the redacted page posted online. Now, in this case, the redacted section actually spells out the information that the investment manager has agreed is subject to public disclosure. There's nothing proprietary about that. And it makes you think they just don't want the public to know what information they're allowed to receive. Now, this slide shows another example of redactions that we feel are clearly not proprietary. The items redacted on this table of contents are titles such as conflicts of interest, investment opportunities, and insurance. Now, this finding doesn't relate directly to Senate Bill 2 compliance, but auditors identified that KRS is not monitoring its investment managers as required by its policy. Now, KRS investment policy requires annual meetings to be held with each manager, but that requirement has been waived due to staff shortages.
Auditor Harmon,
Yes.
you said you were given total access to that. In your opinion, the redacted portions, were they made public? Would that be an unfair competitive advantage? Are these things that are being redacted, are they necessarily items that need to be redacted?
There are some items that are redacted that need to be redacted, but unfortunately there are many things that are redacted that does not need to be redacted.
But again, you are given total access to everything, whether it's redacted or you see the complete contract.
Yes, the
And-
ones we request. Now, if we had requested, whenever we do an audit, Mr. Chairman, we actually request a sample. And of the samples that we requested, they did provide unredacted, which is obviously how we've able to show you what was redacted and what wasn't redacted in those two examples
And
previously.
you feel your samples that you requested were a good indication of the entire contracts?
Yes, because based on the numbers that were provided to us by KRS and KTRS in regards to the total number of contracts, it is quite clear that at least 80% of the contracts of each, as I said, KRS had some conflict in the numbers they provided us, but at a minimum, 80% of both KRS and KTRS are not posted, period. Not posted, period. Whether they're fully redacted or not redacted, they are not posted, period.
Excuse me, didn't mean to insult you there, Representative Miller. Representative Miller has a question.
Thank you, Mr. Chairman. Auditor Harmon, welcome.
Glad to be here.
The 12 that were signed after SB2, what did you find about those? Were they redacted? Were they not redacted? Could you talk about that, or did they make that into your sample?
Some of the ones we looked at, but what we were provided were ones that were funded after the date. But what we were provided, we still found items that were redacted that didn't need to be redacted. And the other thing is, we also found from the standpoint, especially with KRS, that they were allowing the investment managers to do the redactions, and there wasn't any challenge to it at all.
But that related to one signed after SB2 was passed?
There were some, yes, that is correct.
Thank you.
Some that were not on their website.
Yeah, there were some that were not on their website.
Now, you said there's some that are not on the website. You had access to those also?
Yes.
The ones that weren't on the website?
Yes,
And you had a sampling of those also?
correct.
Okay, please proceed.
Okay, thank you. As I said, this slide 10, I think we're still there, yes.
Yes.
Slide 10, although it's not directly related to Senate Bill 2 compliance, we did look at the total of their KRS investment policies, and they're supposed to have these annual meetings, but due to a shortage of staff, they were unable to have these. Now, this also brings up another point of interest, of course, about the number of managers each system have, although it's not a requirement. As of last June, KRS had 110 investment managers, and TRS had only 41 investment managers. Of course, JFRS only has one investment manager. Now, while Senate Bill 2 does not limit the number of investment managers, it certainly should be easier for KRS to properly manage its investments and its contracts if they had fewer managers. Moving on to the next slide, TRS had a process in place to redact only confidential and proprietary information, but TRS, we found they also haven't followed the spirit of Senate Bill 2. For example, TRS makes some redactions that weren't even requested by the investment managers. Shifting gears, Senate Bill 2 also created requirements to add transparency to the amount of fees and compensation received by the investment managers. Now,
Dr. Harmon,
Yes.
the redaction process,
Yes,
the statutory requirements, are they the same for both TRS and KRS?
that is correct.
But they're not complying, their compliance is different.
Their compliance is different, but neither of those two are complying. Both KRS and KTRS have failed to post 80% plus of their contracts. The difference with KRS would basically allow the investment managers to redact whatever they wanted to without any challenge, without any indication as to why they were redacting, whereas KTRS actually had a program set in place to, if they reported that they did redactions, they gave reasonable or gave explanations as to why they were redacted. The problem with KTRS is, one, they still hadn't posted 80% of their contracts, but KTRS also was redacting more than what even the investment managers asked them to redact.
Now, you might have answered this,
Sure.
but 80% of the contracts are not posted. And an argument could be made that there may be a grandfathering in of contracts that were in existence prior to Senate Bill 2. So if that were the case, what percentage of contracts post Senate Bill 2 are not being?
Well, I think the biggest problem, Senator, is that there was no exemption for the posting of contracts. So to look at that would be a hypothetical. So we didn't actually look specifically, but there was some, as I indicated at the beginning, some non-codified language that allowed for some exemptions, but those exemptions basically rested more with 45A, which dealt more with procurement. There were no exemptions for contracts entered into prior to Senate Bill 2.
Okay, please proceed.
Thank you. As I was talking about, one of the way investment managers may get compensated is through carried interest, where the investment manager retains a portion of the investment as profits. Now, in KTRS, KRS actually, in this particular case, was reporting carried interest accurately, but of course, in this particular statute quoted on the slide, Senate Bill 2 specifically required carry interest to be disclosed. Now, we found TRS does not report carry interest in a transparent way. KRS recognized it as a part, as I said, KRS recognized part of the performance fees in a line item on its financial statements. However, TRS does not. And I know
Auditor Harmon,
yes.
could, in simple English,
Sure.
can you explain what carried interest is?
It's profit sharing. It's profit sharing. I'm going to boil this down, and correct me if I'm not 100% accurate, but basically a lot of these investment managers get a standard fee, but they also get a percentage of the amount of money that they make for the investments. So carried interest is basically that profit sharing or a percentage of the fee.
Now, this is not, Senate Bill 2 was somewhat cutting edge, and not a lot of states had demanded that much transparency in
Correct.
the past. But this carried interest issue, many states are reporting it the way that Senate Bill 2 requires it to be reported. Am I not correct in
That
that?
is correct. And Mr. Chairman, as you know, of course, I've sat on the Public Pension Oversight Board since my election, and I have never missed a meeting, and I appreciate that.
We're going to give you an award for that.
Thank you. I appreciate that. Now, unfortunately, I have to leave a little early on this one, but I have.
That will be a mark against
There will
you.
be a mark against me. I'm sorry, but anyway, that has been an item of topic and discussion for the last 3.5, almost 4 years about the disclosing of fees, and part of that disclosure of fees included carried interest, because otherwise you're still looking at the net gain, but you're not looking at that initial gross gain, so it's not transparent from the standpoint of we don't know how much money was lost to fees that could have potentially gone to the retirement system in a time frame when both of them are struggling. Now, I'm assuming that the other side would argue that something along that lines might impede them from certain investments, but we audit to the laws that are on the books, and so it is a requirement that carried interest be reported.
Now, refresh my memory again. KRS is doing this correctly, TRS is not.
From the standpoint of disclosure of carried interest, KRS is doing that portion correctly. KTRS is not.
back at the little history lesson, I guess, is that the reason for Senate Bill 2 was to make sure transparency.
Correct.
That we weren't paying too many fees for too little returns.
Correct.
And to offer transparency to the public, to the taxpayers,
Right.
that, trust but verify.
Exactly.
Am I correct?
You are correct.
Okay,
You are correct.
please proceed.
Thank you, Mr. Chairman. Now, of course, as we were talking about the carried interest, TRS claims the amount of carried interest is proprietary, even though the law, as I said earlier, specifically requires it to be disclosed. Now, on our next slide, this slide lists...
Before you get started,
Yes,
Representative
yes.
Miller has a question again.
Yes,
Mr. Chairman,
yes.
on the carried interest, okay, so KRS was complying, TRS was not.
Correct.
Were there any of the ones you looked at, were they the same investment companies? So you had certain investment companies on TRS that weren't being disclosed in the same investment company?
We would have to go back and check that, but we can certainly check on that and get an answer.
Of course, I'm sure there's countless investment companies, but I was just curious if
Well,
you saw
I know
any
that-
commonality.
I know that KRS, as we indicated, had, I think it was 110 investment managers, and of course, those managers have multiple contracts. And then KTRS or TRS had, I think it was 41,
Investment managers.
41 investment managers.
Not-
So you don't know if there were any commonality
We don't know
between,
if there was any
Okay.
comment. We would have to go back and check that.
I'd be interested, please.
Auditor
Thank you.
Harmon, were you given access to the carried interest information?
To my knowledge, we were.
Yes.
Yes, yes.
Okay. And in your opinion, that information had that been released, would that provide a unfair competitive advantage?
I don't think so. I don't think so. We'd have to go
Or
back
be
and take a look at
detrimental
it,
to
but I don't
those that
believe so.
releasing it?
Yeah, I don't believe so. Because KRS obviously reports it, so if KRS can report it, then KTRS could report it as well. And once again, it's the requirement of the law. It's, the law does require carry interest to report it because it was something of great interest both to this committee and to the public, because there were some concerns in the past about too many fees being expended without proper transparency.
Okay, the law is the same for both systems?
Correct.
Okay. All right, please proceed.
Thank you. Of course, this slide, excuse me, lists all of our findings related to KRS. Now, I've covered some of these in more detail already, but certainly I'll mention a few of the extra ones that we had. In one instance, KRS staff was not able to recalculate an investment manager's fee because they didn't have enough information and really a good enough understanding of the fee calculation in the contract. KRS had, and of course we covered this, and I think it might have been our last public pension oversight, KRS had $16.1 million in delinquent balances at the time that we did our audit, and is the only system that has a significant amount of delinquencies. Now, the legislature, of course, may want to consider, statute changes to make this easier for them to get the balances paid off and collected. But, and of course, finally, KRS paid over $12,000 to deceased individuals in the fiscal year 2018, and of course, we made recommendations to reduce that as well in our audit. Slide 14 indicates, now this slide lists the findings related to TRS, and of course I've discussed these findings earlier, but obviously more detail is available in our audit, and once again you can go to audit.ky.gov, auditor.ky.gov if you want to see it in its entirety.
Auditor Harmon, back up to slide 13.
Okay.
And there's a mention, just looking here, TRS uses fee caps in some contracts. Would you explain why that's on the slide and what that would refer to?
Sure. Fee caps are primarily capping the overall cost of the fees, and I think TRS may have utilized it more from a standpoint of being able to make sure they didn't have too much money out the door early, so it was really more of a timing thing, if I remember
To be able to
correctly.
help them monitor the fees that are paid to the investment managers.
Yes.
It actually controlled the amount or just spread it out over more time to not look, why would you do that?
Actually, in their contract, TRS showed us language that actually indicated that they can They are allowed to withhold money from the investment contractor. If they're getting close to that cap, that's their agreed amount maximum, basically, they're going to be willing to pay. If they get close to that, the contract language allows them to postpone payment until everything is done, and then they can actually control how much is paid out on those fees.
Okay, and then you also mentioned the delinquent balances.
Yes.
Now, is that the issue we talked about last meeting,
It
where
is
we
the issue we
have
talked about.
agencies that are
Yes.
that have not paid their
That is
full,
correct. That is correct.
full amount due?
And in the last week, I think we highlighted some of them in our audit, but in our last committee meeting, they actually gave us a list of the top 10 carriers, provided us a top 10, and I think at that time, they may have already scrunched that down to about 14 million, if I remember correctly from the presentation.
Well, we're doing our job then, if it's
There you go.
decreasing.
We're
So,
working on it. We're
I
working
guess
on it.
transparency is a good thing.
Transparency,
Auditor
sunlight is a
Harmon.
great thing.
All right.
Sunlight's a great thing. All right, and of course, in the next slide, our report only had one finding related to JFRS, which involved, similar to the other one we just talked about with KRS, involved overpayments to deceased individuals. And of course, once again, we made recommendations to how to address this. Our next slide, each of our findings is accompanied by a specific recommendation for KRS, TRS, and JFRS to improve its internal controls and oversight, as well as its overall transparency and accountability. Additionally, I believe PPOB should work with other stakeholders to develop an enforcement mechanism to achieve full compliance with the transparency requirements that they felt important in Senate Bill 2. Now, when it comes to our state employees' hard-earned pensions, KRS, TRS, and JFRS owe it to the employees as well as to the taxpayers of Kentucky to strive towards openness and transparency. Now, the recommendations, as I said, is in our report. It is fully, if fully supported and implemented, would improve both the transparency and accountability that state employees and taxpayers deserve. Of course, we recommend KRS, TRS, and JFRS take action to address all the issues identified in our examination. And certainly, once again, thank you all for the opportunity to come and testify here, and certainly be open to any additional questions that you might have.
We'll probably get you to stick around as long as you can, as,
Yeah, I'm probably going to have to slip out about 2-ish, and so, but we will have additional staff here if there are questions beyond that.
well, if it gets to the point where we need to resume this next month, we
We can do that
we
as
can
well.
also, because this is important.
It's a very important, when we're talking about billions of dollars, part of what we did in our office, we've done previously data bulletins. One of them was our debt data bulletin, where we talked about the fact that the state had $54.8 billion in debt, and of that debt, 80% of it was the unfunded pension liability. So this is important. That is important both to those who have worked hard and those who deserve the pension that they have worked for, and also it is owed to the taxpayers to make sure that those dollars that are spent trying to get this back on track is spent wisely and efficiently.
Director Chilton has a question.
Yes, Director.
Thank you. You mentioned some non-codified support for
There-
interpretation of
If you
the
will go
cutoff.
back and look at Senate Bill 2, there is some non-codified language that basically indicates that there are some exemptions, but those exemptions relied more towards the procurement of contracts.
It's a non-codified provision in the bill.
In the bill itself. Most people are not familiar to the term non-codified, given that I was a legislator for 13 years. I'm a little more familiar, but basically it's provisions that don't make it into the statute. They are part of the law, and they do provide the exemption in that particular case, but they are not placed into statute. Yes.
Representative Miller.
Thank you, Mr. Chairman. And I haven't read your full report, so I don't know if you made this recommendation.
Sure.
Should TRS and KRS essentially give an ultimatum to their investment managers, if you don't
Well,
allow us to print this contract that was signed in 1999 or 2009, that KRS or TRS should withdraw their investments?
The recommendations that we made were multiple, but the ones specifically in regarding to the posting of contracts, obviously you could look at a penalty provision, but you have to be careful because a penalty provision would, normally hurt the funds themselves. But we did recommend that this body may look at possibly prohibiting any or entering into any future contracts that are not fully complying with Senate Bill 2. Obviously, Senate Bill 2 did not have any, that we could tell, any enforcement mechanisms. So it was something that definitely, perhaps could be considered by this body.
But all the contracts, the post-enactment contracts for TRS and KRS, am I correct? Or
the ones
were they all compliant
with
in substantive?
No, because basically, as I said, 80% of the contracts of each, 80% plus really, of each of the retirements on KRS and KTRS weren't posted at all. And then obviously we had questions with KRS, how they handled even the ones that were redacted. And then of course KTRS was a little different from the standpoint of we had concerns with those just from the standpoint of the investment managers, of the ones that were posted. The investment managers, there was some review by KTRS, but then they ended up redacting additional information that even the investment managers did.
But again, I'm trying to narrow down only to those 12, well, at least in KRS, the 12 contracts that.
Right.
And you're saying even on those 12, the ones that you audited, they failed. They failed to do what SB2
correct
asked them to do or directed them to do.
That is correct.
Okay,
Thank
you.
Correct. Thank you.
Auditor Harmon, if we have one bill and it looks like there's two different interpretations of the same bill, and we talk about exceptions, and 80% of the contracts weren't posted online.
Right.
Were all those contracts are supposed to be sent to contract review? Did all contracts make it to contract review?
We did not look at that as part of our special
Okay.
examination. So.
Are all contracts to come automatically to the auditor's office, or do you have to request?
No, we have to request.
Okay.
We have to request.
On a contract, if we did have this debate over a grandfathering of a pre-existing contract when Senate Bill 2 went into place, wouldn't most contracts, wouldn't they be for a length of time, a year, 2 years? They wouldn't be till infinity.
That they would. Now, there are some that would have like renewal provisions every so many years, either one or two. However, if I understand correctly in the language of Senate Bill 2, once they renew, either upon the renewal, then they would have to comply with the Senate Bill 2 requirements. But once again, Senate Bill 2 did not exempt at all any of the posting of contracts. The only thing that was exempted was it contained a non-codified language in regards to the procurement, of items.
Well, I know you're going by the letter of the law. I'm just thinking, you could make an argument, and that would be a legitimate argument that. So I'm just trying to come up with the solution. Why, if a contract was pre-existing, how long does it last? Eventually, every contract has to fall under the guidance of Senate Bill 2, correct?
Correct.
Eventually.
Eventually, either upon renewal or initial signing. And of course, but they all, whether they were renewed or not renewed, whether they pre-existed Senate Bill 2, all of them were required to be posted. Now, you have to, provide redactions, but they were all required to be posted.
Now, and I know you made a lot of recommendations.
Yes.
But what is the fix for this issue? We obviously have agencies that are not complying with the intent of the law.
Correct. And the fixes, of course, we discussed a little bit of the fix, and there's probably no, silver bullet, but, from the standpoint of this body, as well as the full General Assembly, felt it necessary, and actually, as I indicated earlier, it was a bipartisan, a unanimous vote, felt the need to make sure that these contracts are posted in a transparent way, and the carried interest is posted in a transparent way. So because you all felt that that was necessary, as well as I did feel it was necessary, that it's important to make sure they have some enforcement mechanism in that. Now, as I said, you could look at certain penalties, but you have to be careful because you want to work with your stakeholders to make sure that those penalties do not actually penalize the funds themselves, but at a minimum, you could look that going forward upon either renewal or initial signing of contracts, if the investment managers do not wish to comply with the requirements of Senate Bill 2, then you could compel the agencies not to enter into those contracts.
Okay. Seeing, Representative Miller's back on deck.
All right.
You're not?
Okay.
Okay, I failed to cross your name off. Okay, seeing no further questions at this time, please
Thank
stick around as long as you can. And
Thank you, Mr. Chairman. Thank you, committee. We appreciate it.
at this time, with his permission, I'd like to call former Senator Bowen to the desk to give a, please come forward if you don't mind.